All righty, let's get started. Take a look at the markets and some trade ideas for the week. It is Monday, July 3rd. Short day in the markets, only until about 1 o'clock today. So we'll use the time that we can here since we're live to get some decent looking charts and items. And I'm just going to spend a few minutes going through some of the indexes, overall market from my perspective, and then we'll jump into some individual stocks and some trade ideas. I've got a handful of trade ideas to pop at you guys today. So looking at SPY here, you can see on the left-hand side here is the daily on SPY. We've moved up, came down, bounced back off of that former resistance level, moved back up, and now we're just having a little bit of a struggle trying to break through this previous high up here on 44.44 or so. So if we can break through the 44.44, I think we can run a bit higher. If we're looking at the weekly charts, still in a squeeze, everything's in an uptrend. The only things that make me a little worried about SPY right here is, number one, you've got this RSI up here on this previous high, and then the RSI is only here on the last 2 days of highs. So RSI divergence is down a bit here, which would make me a little bit worried on how things are going on SPY. But overall, you've got a squeeze firing here. Stochastic momentum's up. MACD about to break positive again. So some really good looking stuff on SPY. I think, we can move quite a bit higher. I don't know if we're, heading to new highs or anything. I think the first target, if we can break through, is going to be around this 461 mark, somewhere in here. Your previous highs from all the way back in March of last year. So if we can, we'll retrace more of that piece. The other thing here that's interesting here is on this particular move up, we'll keep an eye on some of these fib levels as well as we come down. But you've got the 21 EMA around 433. You've got this previous resistance, which is now support. You've got the uptrend line, the 50 EMA. There's a lot of good support places here. So I think we can definitely hit support in a number of places here. So SPY looks decent after this pullback. If we can get through this 44.44 area here, then I think we can move higher on SPY. Taking a look at the Qs real quick, similar type of action on this. On the weekly chart here, though, this thing has just been in an unrelenting uptrend, which would make me want to stay nervous that this thing is not really pulled back or taken a break at all in here. And it's pretty far away from its 21 EMA. When we look at SPY, yeah, it's getting farther away on the weekly from its 21 EMA here, but on the Qs, almost seems to be a little bit farther. I mean, they're pretty similar in that respect, but you've got this high from the other day that we have to break. So if we can't break that mark here, then I think we can go lower a bit for a while on the Qs. So I think from a tech standpoint, that's something that we'll continue to take a look at, is where are we on the Qs. But Qs, again, still looking like it's getting stronger in here. A decent pullback close to the 21, maybe bounce higher. It's the weaker of the two, but we'll see what happens. I think on the weekly, though, you're seeing the MACD tipping over, stochastic momentum tipping over. They're both overdone, but it doesn't mean we're heading lower. But again, similar to SPY, where RSI hit a high back here around the 16th, RSI is way lower than that here on this next run up. So a little bit of a, divergence on those. We'll keep an eye out on what's happening there. Now, IWM, on the other hand, I think it looks pretty good. I like IWM here. And the reason I like it is we are nowhere near as overbought on on these weekly charts. We're back up to this downtrend line that we had. So we haven't really set the highs here. We have some more resistance overhead to catch up to where the SPYs are, but you've got a weekly chart that's just starting to make some moves higher. And on the daily, we're not as oversold. MACD is still breaking through. You were in a squeeze, maybe a signal here today. We are just right at this spice in here. And RSI is pretty similar to the highs that it had back in here. So that's leading me to believe that we may have a chance to move higher on IWM. So we also had a PSAR reversal signal today on IWM. So I do like IWM. I like the small caps here, growth portfolio, which has got a lot of decent financials, techs in it. But IWM looks good in here. It's probably my favorite of the three since we're not so overdone on it. Now, because IWM is in this little bit of a triangle here, maybe making a move to break higher out, I think a strangle or something along those lines is a little bit better off, or at least a 112. Now, let's switch gears a tad and take a look at why a 112 might be a little more difficult. And I'm going to share the trade platform, and let's take a look at IWM. Can we construct a trade based on what we're looking at here? If I was doing a strangle, I'd want to be somewhere out around the 90 DTE on this. And if I was doing my normal strangle, I'd probably be somewhere around the 7 delta and the 6 or so delta on here, which is very, very close on IWM. And the skew on IWM is crazy. But here's what we're looking at on IWM. Changes to the trading account here. So I'm taking in 117 bucks on 1877 in buying power here. So that's a 6% return in 88 days. We're going to hopefully close in a third of that time for 50%. So if I'm taking in 6% now, and I've got I'm going to close in 30 days or 1/3 of this time. That's not a bad return. That would give me closer to a 3% return. So $117 times 50 cent 50% gives me $58 on 1877, which is 3%. If this trade matures in 30 days, so that's what we're looking at. Here. So it's not a bad trade on IWM if you want, especially on the buying power. From a strangle standpoint, not bad. The 215 though would make me nervous, and I'm nervous to the upside on IWM because I think, as we just looked at on the chart, I think it has the most upside right now. Not that we can't go a little higher in SPY or Qs, but I think IWM has a lot more upside to go. And I don't know that 215, which would be where the top of this strangle is not out of the question. I can't really put on a good 112 trade here in SPY that makes a lot of sense. If I try to put something on, let's play around a little bit with some of what we're looking at here in IWM. We're gonna have to play with these strikes a bit. You've got a trap. Probably need to make this closer, a little wider. I can't get far enough away, in my opinion. So the 152. Not far enough away for me. So 152 off of 187, 35 points. 187, so about an 18% downside. I'd prefer closer to 20 on the downside, but it's not terrible. It's not a bad, certainly a bad trade up in here. But we'll keep an eye on what we can really do with this particular trade. Something not calculating right on these IWM trade, because it should not be $700 in the trap up here. But I don't like the fact that we can't get high enough away. However, what I would consider doing, you know why? I totally messed that up. Sorry about that. Let me go back and redo this one again on IWM. Now I know why I was getting such a funky reading. All right, so let's take a look at this again. I had a leap stuck in that thing. All right, so here's what we're looking at on IWM. If we try to put on a 112, we're not getting a great amount of premium here. Far enough away, maybe, but the premium is just not great. I mean, 85 cents on $3,000 or 3,096. It's only about 3%. So I'm only getting about 3% in the tail here. I can't really make this a whole lot narrower to make a big enough change. Here I could get maybe a $102 on 3,000, but that's still not going to give me a really good return on this trade. So 3% waiting 88 days, not good enough for me. A 113, is a possibility to try to get some more money on it. However, you're increasing, your risk a bit more. I'm not able to get a whole lot farther out. I'm still, even on a 113 version here, I'm only getting $163 on now 4,600. So I'm still only getting 3% on this. So I just don't like the way IWM falls into place on a 112. However, I do like the way the Russell looks. So let's jump into RTY. Eddie is getting ahead of me here. So I'm actually going to go out about 60 days, which is my typical 112. I did go out a little bit on 90 on the last one, but let's take a look at RTY here. And I looked at this trade earlier today. It's about the same, 1825, 1800, and then 1600 on the shorts. Again, the benefit of using futures is that we've got a lot more leverage working for us here. So now let's take a look at what this trade looks like. We might have to make some movements or move some things around, but overall, let's take a look at RTY. And here's what this particular one might look like. Don't know that we're still getting a great trap on this. Here, maybe if we move these down a bit, getting something a little bit better. So with the 1600 puts and then the 1775, 1750 on RTY, I mean, the IV rank is just so low. It's just so difficult to get enough premium out of these naked puts anymore. But on 570 on this particular trade, so 570 is going to give us a little bit more of an opportunity here. But on that 50 multiplier, okay, you're only making $285 on 4,400 in margin. Okay, but now I'm at almost a little over 6%. So this trade makes a little bit more sense. I've got a pretty decent downside, still maybe not far enough away, but 1,600 off of 1907. So 300% down, or 307 to the downside, and that's a 16% downside cushion. So this is not looking too bad. I'm pretty bullish here on RTY. So I think this trade, 580 or so, might be a good trade opportunity. I try to go up just a little bit higher again. Still not bad. I can get a little bit of a higher trap on this thing. And I'm still taking in $228 in the tail on 4,400, okay, which is only about 5%. So it's probably better for me to try to keep that 6%. and figure out pain. Just take a look at what we're looking at this. So I think this is the best probably setup for RTY in here. $4,300 in margin. I'm making 285 in the trap, 43.93. So I'm right about 6.5%. So I think this is a good spot to put on an RTY 112. So I do like this trade. I think RTY is stronger than the rest. So I'm going to now look to put this on, getting about $3 or so for the put debit spread. And I'm going to take in about I don't know, about $4 and change here, giving me a $5 overall credit. So I think that's what we'll look at. If we can get 570 for this, that's not bad. So my goal is to get $5.70 out of this, and we'll just wait to see what happens on those. So we have the IWM working. Let's get back to taking a look at charts again here. All right, so we've covered SPY, we've covered Qs, we've covered IWM. Let's get into a few other symbols. So let's take a look at CL. So let's take a look at oil. On oil here, you've got this really on multiple time frames, but you've got this descending triangle, and I love triangles in here. You're going to get a nice descending triangle. We've bounced off it once, broke it technically on the day, but then finished above it, bounced off 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 it. We have tested this whole range right in here around 67 numerous times. So that gives me an opportunity here. Yeah, Eddie, I'll jump back on that put spread on RTY in a bit. I didn't see your message till now. So this is probably setting up for a breakdown, but I really, like what like that we've held this quite a bit, and I like the internals here turning up. I think oil has some opportunities to run. If it breaks below here, we could head down to the low 60s. I just think that's close to the bottom of where we might be. What would you do here? I think I'm not going to do a whole lot of anything, but if I was placing a trade on CL, let's go place some trades. So let's take a look at what we could do on CL. So we've already got multiple trades working on CL. Here's our Income Navigator portfolio. You can see we're in this 112 here. We're up 125% on that. You can see we've also got another 112 here. We're up 114% on that one in 34 days. And then we are sitting on a strangle, which is up 18% in 12 days. So we've got a good number of CL trades on, but let's see what we can do on CL. I'd really like 60 days for a 112, but let's take a look at what that might look like here. If I was going to put on a 112, again, I typically like somewhere around the 25 delta is my favorite. I think on CL, I've been sticking around 2 wide, I'm sorry. So let's take a look back here, and let's just pick the 65, 63 for 50 cents, and then we'll go on down here, pick something around 52-ish or so, and see. Now remember, CL has a 1,000 multiplier. So let's take a look at what this trade looks like here. Let's clean off all the old stuff and see what we're looking at and what we have to do to move some things around to make this trade look a little better. All right, so $4,000 on a debit. I'm sorry, I'm buying power here. So $4,000 buying power on this thing to make 120 bucks. Obviously, that's not going to get the job done. So we're going to need to move this trade around here to get more than that, because that's only about 3% in 74 days. I've got to double that up. So there's a couple things we can do. Number one, we can tighten up these spreads a bit. So now Now we're getting about 370 bucks. We have a very small trap, essentially, but it's actually not bad. So one wide here actually looks pretty good. We've got 370 bucks in the trap because we have 1,000 multipliers. So 370 bucks in the trap is pretty nice. We're using 4,600 roughly in buying power. That's an 8% return on this trade right now. So in 75 days, we've got an 8% return in the tail, and we've got a low all the way down to 52. 52 is well below not only our support level, it's below the 3 ATR level, it's below the May lows of 64. You have to go all the way back to, I don't know how far back we got to go. Let's take a look, see how far back we got to go just to hit those lows around 52. That's somewhere in 2021 in January is the low, is when we were there. So about January, February of 2021 is when we hit that low. So overall, I like this particular looking trade. I think it's a good opportunity here. So I think if I was adding a trade, this would be one I would definitely be very interested in. You've also got a nice trap here that's approximately 4 times bigger. So if we drop down into here, you're going to get 1,350 bucks to land in the trap. So if oil moves higher from here as we move through the summer travel months here, and things get ironed out a little bit on a couple areas. I mean, travel, I don't know if you've traveled lately, but man, I've been on planes recently and they are booked to the gills. The roads are busy. So people are driving, people are traveling. Everyone I know is driving somewhere right now. So lots of opportunity on oil. I think this could be a good opportunity. The only thing that makes me nervous is that descending triangle. If we break that, how far down do we head? I'm going to guess the low 60s, which would put us in the dead center of this trap. So I like oil here. If I was placing a trade, this would definitely be one trade that I would be putting on. Okay. So there's an oil trade. Let's write it down and we'll share this in the group later. So 52, 64, 65 for September 15th. All right, so there's a real good trade opportunity. So now we've got essentially 2 112s that we've looked at. We did an RTY and a CL. On the RTY as well, let me go back to CL and clear this thing off so I don't place the trade somehow. On RTY, there was a put spread. If I'm doing a put spread on RTY, because I have a much more shorter term bias, I would probably be going out about 30 days or so on this particular one. And taking a look at something along these lines, 1,800 or so. I could probably even do something a little bit wider. Yeah, probably not. So this 1,800, 1,780 might be a good opportunity on RTY to put in a put spread out here. Eddie, you had something on 1,550, 1,350. I don't know what time frame you were looking at for that. That's a pretty far down spread. I think that was probably like a 60 DTE or something like that. So 1,550, 1,350. It's not a bad spread. I mean, you're a 3 delta here with a 200 wide spread, but you're only at a 3 delta. You're taking in $100 on $1,000 in buying power. So you'd make $50 on 1,000 if you close it at 50%, which is a nice, 0.5% or 5% return in 60 days. So it's pretty close. So not bad. Maybe pull this thing up a bit higher in here. Take a look at something like this, so I get a little bit more. Maybe, but you could do a put debit spread. I am bullish on this. RTY as well. So let's jump back and just keep switching back and forth, and let's take a look at some more things here. So let's take a look now at gold. So gold also in a bit of a downtrend here, even on the weekly. What you'll notice is on this move up here, we are now at the 618, pullback, or the 618 fib level. And we've started to bounce and hold this 618. That's a pretty good sign. And we've got a PSR reversal just ahead here. If we move up, stochastic momentum's moving up, squeeze is moving up. And then you've got the MACD reversing as well. So I like the short term on gold. When I'm looking at the weeklies here, look how oversold we are. MACD continues to drop, hasn't started to reverse yet on the weekly, but that's all good. We are potentially in a bit of an oversold area here, and same thing on the daily. You guys gotta excuse my voice today. It's going, but I think you could break this downtrend fairly soon. There isn't really much of a support level in here. You got the 200 EMA that we bounced off of. We're just under the 20 EMA. So I like gold in here. I think I would also be very partial to putting on gold. I've been doing strangles on gold. We had another one come off today. I actually closed it for a pretty significant trade. So I think in the IRA account, we closed a gold trade today that I totally forgot about. And I made 61% because I didn't put a 50% profit target on it. So gold just continues to do well. This sideways movement here, if it's down, has been pretty good on gold. I think you're right in the middle of the range. You're at the 618. You're just under the 50% retracement. I mean, it's perfect, I think, for a setup on a strangle. So if I was doing something on gold based upon what that chart looked like, I would be putting on gold strangles in here. I know I've got the weekly thing going, but I don't do that in every account that I have. So if I was going to do a gold strangle, I'd probably go out to 85 days. I'd probably drop somewhere to about the 1790, which is below the most recent low in February of this year. So 1790 is a pretty good low. And then the upside here, maybe 2190, something along those lines. Okay, so I've got $1,770 getting paid for this strangle, which is taking up 35.43. So this is a 21% premium on this, and if we close it at a 50% profit target, that's going to give us almost an 11% return in maybe 30 days or so. Gold's been depreciating pretty quickly, still low IV, but I think you could do some really nice strangles in gold right now. So if I was doing anything in gold or GC right now, I would be still strangling it. I still think it's the best thing to strangle right now. And I think oil is probably right behind it. So that's where I would be on that one. Let's go back and take a look at some other indexes. Bonds, also some interesting stuff in bonds here. Raj, I will get to Amazon, so hang in there. Amazon's coming up on my list as soon as we get through some of the futures here. All right, so on ZB, bonds have been just trading in this range solidly since the end of 22, just bouncing up, bouncing down, bouncing up, bouncing back down, maybe moving, I don't know. So bonds have been just in this tight range, but they're fairly oversold and maybe coming off some of these levels. Now, if you think that the Fed is done raising rates, now I think they have one more to go. So I think we're going to get a 25 basis point hike here coming up. And then I think that might be about it. Maybe there'd be one after that in an extreme situation, but at least for now, I think the Fed's got one more hike to go and they're done. Okay. So if interest rates aren't being raised by the Fed, I think when you're looking at bonds, I think bonds are going to start to rise. So I think bonds, as the Fed starts to either pause or eventually ease up, bonds only got one way to go, and that's up. So I think if you want to do something longer term in bonds, I think you got to be bullish on bonds in here. So I am bullish on bonds. There's a couple ways that you can play this. So let's go figure out how we're going to be a little bit more bullish on bonds, even though we've been in this neutral sideways trading range for a bit right now. And I think we could still come down closer here, test this back out before we move up. So I don't think bonds is completely out of the woods, but I am longer term bullish on bonds, especially after this big drop off that we've had going back quite a ways on things. So if you're taking a look at bonds, we're taking a look at some of these downtrends that we have working on bonds. And have we broken any of these? Yeah, well, yeah, we broke this one in here. So this was one where we broke above, tested it again, and that's when we got into this particular range. So longer term, I think bonds still moves up. I think you're in a uptrend on bonds. It's a bit in here. It's tight. I'm not saying it won't break down, but I think you've got this particular triangle, and I think we could also draw, some resistance up in this spot here. We could maybe move this thing around and go a little higher. I usually like to identify resistance a little different than a trend line on it, but maybe some resistance in here. We could even, plug this thing up as a resistance level here as well. So a bit of a sideways action, but let's look and see what could we do potentially in bonds. All right, so if you are looking at bonds here, what can we trade? You could go out and look to trade potentially a strangle on bonds. I'd probably look about the 116, something around the 116, 140. That 116 would be almost the lows that we hit back in October of last year. And then the highs of 140 is an area that we were at in July of last year. And I think we're right in the middle of these things. We're right in the middle of the average true range as well. So you would be taking in $406 on 1900. That's a pretty good return. That gives us roughly, again, a 21% credit. If we close these at 50%, you could do pretty well on a strangle. So I think you have an opportunity to strangle bonds. I think you also have an opportunity to do a 112 on bonds, but I'm going to switch it up a bit and, well, let's just knock out a 112 here. Let's just use the standard setup and then see what this thing looks like here on the curve. So if we take a look at bonds and take a look at this particular trade, it's not a particularly great looking tail on the trade. We're not getting paid enough income on this particular trade to make it worthwhile. I don't want to make $94 on $3,270. That's not quite 3%. I need to make twice as much. I really cannot tighten anything else up on here. So I'm not really, I'm not looking at a 112 would be worthwhile. That strangle looks good. The other thing I would consider is TLT. If you like bonds, then you should like TLT, and you should believe that TLT is going higher. I definitely think that we could maybe even look to sell some leaps on TLT in here. So selling a leap on TLT might be an option in here. I think you can tighten this up a bit on TLT, potentially on a leap. I also think you got to go out a little ways past the next Fed move, but maybe even on the 46, we could look at putting on some sort of a put spread or something along those lines. But I like TLT. And I think what I'm probably going to start to consider doing is, just like SPY, I'm going to be okay selling some naked puts on it here. The lows on TLT, I should probably just move this chart so I don't have to keep flicking back and forth on you guys. Here, so maybe this is what I'll do, is give me a second. Yeah, no, we'll leave it the way it is. Is on TLT here, you've got a nice uptrend going. Okay, so we've got an uptrend that's in play here. You've got some resistance up in here. You've got some gaps and such to fill, but I think you've got, you know, a decent resistance level up in here somewhere. And I think you can get long on TLT. One of the trade groups I was in yesterday, I think this also came up by Bob Goodwin as well. So give Bob some credit on this one. He's been adding TLT consistently for months and months and months. So I think I would be okay even getting assigned somewhere on TLT around this 100 level, maybe between 90 and 100, I think would be a good option on it. So we're selling off a bit here, so we'll let this thing play out, but I am going to look to do something on TLT, potentially selling some either puts or naked puts or something on it just to keep engaged with TLT. But I also think from a leap perspective, we could do leaps around maybe the $14 mark, and or a 14 delta mark. That would give us about $116 on $880. So that's a 13% return. I'd like to see a little bit more. Maybe we have to pop it up to 90, but overall that would not be a terrible trade on that. So we could make some pretty decent money on those. Maybe put on about 4 contracts of TLT, sell some leaps. I'm probably going to look to do that coming up. So there's where we are on TLT. All right, let's pick up the pace a bit more for you. XLK, we've already covered QQQ and SPY. It's pretty much identical. Is it going to break through this resistance area up in here that we've been establishing? Potentially it will, or it's just going to fail down here. It's on a PSR reversal signal. We could shoot higher. I just think these things are getting overextended, and tech at some point needs to take a little bit more of a break than maybe it did, but maybe it had its break and now it's going to run higher. Who knows? I think XLK is an area to keep an eye on. XLY is off to the races. It has already moved higher, so it's moving the markets higher. This is your Tesla and Amazon, both doing very, very well. XLC is moving up towards this 50% retracement of the downtrend and is struggling to get through that area here. So we'll keep an eye on XLC, which is your Googles and your Meta stocks. We'll see what happens with these. I just think getting a lot longer right here without any kind of additional pullback might be less of a good risk trade. I'd rather find something else that I can get into that has a better looking risk reward. And one of those here might be financials. Financials starting to really, it broke out of this triangle that it was in. So that triangle is now gone. It broke through some of this resistance on this little gap up here, which technically is also this little support zone area in here. So as it broke out, it dropped back, broke out again, and your uptrend continues to just follow along and increase. So I think it's good looking opportunities on financials. If the market's moving higher, financials got to be part of it. And you're starting to see the 21 over the 50. We're just not over the 200 yet, but we broke the 200 on this. So I think financials have some bit of room to run. If you were trading financials, when you look at some of the financials there, in financials, you've got Mastercard, you got Visa, JP Morgan, Berkshire Hathaway, but I think Mastercard might be the play in here if you think financials are moving higher. So let's take a look at what we could do in Mastercard on some trades. So in Mastercard, I'm bullish short term. I might look to put on some kind of a put spread or something in Mastercard. Let's just take a look at this 5 wide. Maybe we can make this 10 wide. Around 370 in Mastercard. If I wanted to look at some support levels, you've got 380 is the 21 EMA, 376 is the 50 EMA, 360 is the 200 EMA. So Mastercard's really moving nicely here. You could look at doing that, or if you want a lower risk trade on this, you might look at a butterfly. I'd probably pop this butterfly maybe around the 410, which is the expected move of about $15 higher from here. And let's make it a 15 wide butterfly. So for $365, you can make up to $1,100 on this particular trade on Mastercard. If you want to fuss around with it and you think we're going higher, you can make it a little bit of a broken wing to the upside. So if we're moving any part from here, we're in this trap and we have an upside where we're going to make at least $145 on this trade. So this might be a good opportunity here. Maybe something along this line. It's a little bit more expensive of a debit for you. You can start to move this thing out of and cheapen it if you want to move it this way and move away and pick some upside here. Something along this lines might be good. We just have to move up, to about, this level on this butterfly. The only thing I don't like about this particular butterfly is it's a pretty costly one. You could do something smaller and closer in on this along maybe these lines and put a nice butterfly, broken wing butterfly trade on Mastercard. That way, 405 is well within our expected range over the next 25 days. We're only paying $284 on this, and we've got no upside problems at all. So even if we blow through it to the upside, we're going to make some pretty good money. This would be, in my opinion, a pretty good opportunity on Mastercard. So because I didn't really like the put spreads as much, I might look at a broken wing butterfly in Mastercard, doing the 395, 405, 410 for the 728 expiration, or somewhere around 284. Anyway, it gives you a chance of what we're looking at with financials and a way to play it using Mastercard. Can you play just the financials? You can look to do something on just the financials here. They don't really work great on 112 trades. You just have, look at this, you just have no, trading XLF is just virtually impossible. There's just no money to be made in any of these contracts here. So I don't like trading XLF, the actual ETF itself on that. All right, so let's take a look at XLE. On the chart on XLE, just like XLF, really like the way it looks. I think you're popping up right against resistance level here. We've had this downtrend line that just continues in XLE, which is all good. And so we have this downtrend line that's continuing in here. It's a little wider so it stands out for me. But I've also got some resistance right in this area here. So I'm not going to draw a range. I'll just draw an actual line for this one right now. But if we take a look at what things look like here, got some resistance there. Obviously, this is a pretty sharp triangle heading up. You still have this uptrend line that we're still in. So you're getting pretty tight in this range here. This is a pretty tight triangle on the larger time frame that we have in here, and of this move from the lows of July of last year all the way up to November of last year, we are down to the 618 level, which is here, and that's exactly where we're bouncing off, which is this support area here. So we are bouncing off the 618. You got support down in here. I think this is a great opportunity for energy on the weeklies. It looks pretty solid, pretty strong, flirting with a squeeze here. We've got a PSR reversal that just happened. We're starting to break out. So I think energy is a really good play. We've already got an energy trade working, but let's take a look at what that looks like. So energy trade that we have working, we have a leap on this right now. That leap, by the way, is up 24.5% in 20 days. So I think we can continue to want to look at selling leaps somewhere around 60. I think the last one we sold around 60. Yeah, we could stay at 60. We could stay at 65, anywhere in here, but 60 on energy would be a pretty good opportunity. It would be well below the last year. And if we look at trying to get something that's in the middle, the midpoint, that's taking $145 on $600 margin. That's a 24% return. If we held this for a full year, we'd have a 24% return, which is fantastic. If we get out of this thing for a 30% profit, we're going to make pretty decent little money here on this one. I like energy. I think you can stay with some leaps here. So I'm going to bulk this thing up a bit. Let's go 5 contracts on this one. Can we get a little bit more? Try to add a leap on energy. Obviously, it's so far out that I probably won't get filled at what I want, but we'll keep an eye on it. Okay, so 140. Yep, so we did get filled on that. So XLE got filled on that one out a bit. All right, so there's XLE, the 60, the 361. Sure, I just did. Take a quick look. Oh, I closed it. Okay. Oh, the one just closed, actually. By making that move, I just closed because I moved the older strike. So I'm still working on this one. I actually got filled just now on the XLE. So perfect. So we just had a nice winner on XLE on the day. We'll take a look at our leaps on the account, and we closed it at 144, and we just opened another. So we've got another leap here on XLE. So we exchanged one for the other, and we're out of the one trade. So 23% gain in 20 days. So we can't beat that. So we'll take that. We'll be out, and we've got another one working. So we made a little bit of money today on that trade. So there's where you are on XLE. Now let's just take a quick look at some other charts for you guys, and then we'll move on. We've been going for a while. I'm going to skip all the way down to some stocks now. Let's take a look at Amazon. Amazon here, I still like it. This is a stock, the only stock that I'm trading. So I won't trade any other stocks but Amazon. It's the only one I'm in. We have a synthetic long on Amazon that's doing fantastic. That is up a boatload. So we're up over $9,000, almost $10,000 on that trade now in 96 days on that synthetic stock as Amazon just continues to grind higher. It's getting a little bit extended. You've got some resistance here that we broke on this triangle, but this little triangle piece just continues to want to march higher. So it doesn't really matter where you draw these from. You've got a decent triangle moving higher. Let's take the longer term one. on the daily. So you've got this March higher. This one broke. Now you got another triangle building here. Trying to get there today, not quite hitting the resistance on Amazon, but Amazon is up a fraction today. So I think Amazon still looks good. You're in a squeeze, you're firing, you're not overbought whatsoever here on the dailies, MACD reversing higher. So I think Amazon has more room to run. If I was trading it, again, I've got the synthetic stock that I'm writing calls on, which has been super profitable. If I was going to do anything else in here, what can you do in Amazon? So if you want to trade Amazon, you've got earnings coming up on the 27th. So you do have IV a little bit better on this thing. Let's take a look at the 28th. You might be able to put on something around like a put debit spread around the 118 mark. In here, you're heading into earnings. I'm not going to hold this all the way to earnings. Earnings is the day before this expires. I'm hoping to be out by then. I would potentially be looking at something along this line. I'm actually taking in a pretty decent return on this. Even if I go down to 117, 140, 32 bucks on 268, which would basically be a $16 return if I close at 50% on 268 margin. So that's a 6% return within 25 days. So I do like this trade on this particular piece here. All right, so the question was on Amazon. Let's just take a quick look at, this is our portfolio for the account. This is the synthetic stock position. And if you don't love these new groupings by Tastyworks, it's about time. Soon they fix a few more things, but here's the synthetic stock position we're in. I don't think this 441% is exactly right. But we've got 9,525 bucks since the opens, up another 160 today on this synthetic stock position. And we're using up about $11,000 in buying power so far to make $9 grand. So it's a pretty good return, not 441, and it's crazy. I have no idea, but we'll take $9 grand in 3 months. It's not a bad little play, but right now, if you're trading Amazon, I would think put spreads or something might look decent. I'd also consider putting on a leap here. All depends on where. If I get like a third of the width, maybe something around 91, I could sell some leaps at 91 for, the midpoint on that leap is 274, so 274 bucks is what I would take in on $910, 30%. So 91, if I'm doing leaps on this, I don't think I would mind actually selling leaps at 91. That is a 40-point drop from where we are. Okay, so a 40-point drop on Amazon, okay, is a 31% drop in Amazon. So if you think it's going to drop all the way to 91, 80 was those lows back in December. I'm pretty bullish on it. I might want to wait to do this, but we'll see. But that's not a bad opportunity to sell that on Amazon. So you get a couple different ways you can play it. I think the short-term plays right now are the better, because I think you have some upside, especially if we get any kind of a pullback. I think you got some good ways to move up. All right, if there's any stocks you guys want to take a look at, pop them in chat. We're going to wrap up in about 5 minutes or so here. Taking a look at Apple, that just continues to be on a rocket ship to the moon here on Apple. This thing is not pausing. It has not visited this 21 EMA since back here over a month ago. I would think that that's got to happen at some point in here. I would be looking for that pullback here to do anything on Apple. If I'm in Microsoft, same thing. We're starting to see a tip over. Look at Apple here. It's still going strong on the weeklies, but Microsoft, on the other hand, is really struggling here to make any more moves higher. Its momentum is coming off. RSI is dropping on this thing. It's heading down. And again, as we hit these highs, as we started to move up, RSI was moving up, but we're not there. RSI is in a downtrend. Microsoft, maybe it's going to bounce off this 21. Maybe we break it. MACD's positive, and you've got, not quite in a squeeze, but you've got some positive momentum. I would be looking for these bounces off the 21 to get longer on some of these names. Meta, same thing. Look how tight this thing's getting. So you've got this triangle, ascending triangle that's moving forward. There's not a, I guess a pretty decent little range right in here that's been absolutely stopping this thing cold multiple times. So here's your resistance level. We still have this triangle that's moving forward. We actually probably tighten it a bit. So there's this triangle that's moving forward that dates back quite a ways. I mean, it may even go back to somewhere around January, but we really started this triangle, this uptrend line and the channel. So this channel is getting tighter and tighter and tighter on Meta. It's going to make a move one way or the other. Right now, that move looks to be potentially to the upside. If it can break through this 290, again, I think a butterfly trade here in Meta would be absolutely worthwhile. Because again, butterfly trades, I'm playing this breakout. So if we break out, I would butterfly this thing on this move. Tesla. So if Tesla broke through the downtrend here, it's just been off to the races. So this downtrend really no longer in place. It's getting pretty extended, popped up again today. I don't really know what you would do in here, to be honest with you. This thing is making new highs. It is getting very overextended. You have a PSAR bullish signal triggered today after this little bear reversal. Tesla could go higher. I mean, it doesn't really have anything stopping it until about 315 up in here. So if we take a look at these, maybe this is the next stopping point for Tesla. So somewhere up in here, potentially, I'd keep an eye out. I don't know. Will it get there? I don't know. That's still quite a ways away from where we are. We'll code this thing as a resistance level. But you've got, we'll see if this becomes some support where we broke out, we came back to it, we bounced. Now, will we bounce and use this to move over? It did come back close to its 21. So Tesla looks good. I just don't know what I would trade it, how I would trade it, to be honest with you, because the risk of dropping is great. The risk of going up is also pretty good. I mean, it's got lots of things moving in its favor. The upside might be the direction still for now until we get up closer to this 300. I think it wants 300. I would probably play that as the bet and maybe a butterfly trade because that's low risk on that particular one. A cattle question. Let's take a look at cattle. So let's look at cattle. Similar, looking to the NASDAQ or the S&P. We've got some resistance up in here on cattle. We'll see if we can break this area on cattle. So let's draw that in for now. And then, oops, need to do that. Get rid of that thing. And then you've got a nice uptrend in cattle. So it's been trending up here. It's a pretty good uptrend in cattle, and in a sharp move, of course, over the last several days on cattle, looking for it to maybe get a little bit overdone here. Look where RSI was back here. You get an RSI all the way at the top, almost to the 100. Okay, now look where RSI is right here. It's not quite to that spot. Now we're not, if we start to tip over here, you've got a bit of a divergence on RSI. You're not seeing new highs in RSI, but you are seeing MACD breaking out on this move, squeeze firing. You're overbought, but it doesn't mean we can't stay there. So I think, I think right now cattle, we're just going to hang. We've got a trade on cattle that's going on right now. We are down a bit on that trade. We have a strangle. but our strangle is way up here at 200. Okay, so our strangle's up here at 200 and way down here at 152. Okay, so even though this thing is made, I know it's a terrible looking drawing, but here's our two ends. I didn't draw them perfect. It's all good. But this is where we are. You're almost still in the dead center of these. So I'm not really too worried about it at this point in time. The trade's down a bit, but I think you're getting a little potentially overdone. And if we break through here, I'll be a little bit more worried. But you're heading to the 3 ATR range on decent momentum. Let's just see what happens on cattle. UNG, the nemesis. So this trade cost me a bunch last month. You can see that this thing is just starting to build a base down here. So I think if you're trading UNG, I still think we had the trade. I still think we had the right idea. We just had bad timing on this trade. So that guy, one guy came out, I think it was the CFO, made a bunch of comments, tanked his own stock. That's why that was almost the last straw for me in giving up trading stocks. Is you get guys like that just come out, say something, the market tanks it because he makes a comment, and that's you're stuck. So I think you've got a bit of an uptrend here. You may even have a little bit more of an uptrend if you want to count this one into here. Let's see what happens on this, but I'm not doing anything on UNG until I think you break through this 7.5, 772, I think 774. You got to get up to this range here to make a move. I think UNG is just sideways trading for now. MACD, the momentum's coming out. It's tipping over on the squeeze. Stochastic momentum, the air's coming out. It's decent on the weekly. It's not great on the daily. So I think they just wait and see how things shape up here. If it bounces off this 21 EMA and rolls, then good. I think healthcare has some opportunities, but not right now while things are moving. So there's UNG. Yep, if you're in it and you've got a lot of shares, 7,500 shares at $7. I think you're just hanging in there. On the monthly, like I said, the internals are all moving higher, except for this MACD pointing down, and you're just in this sideways channel here. I don't think we're dropping too low. I don't know that we're dropping below 6 or anything here. We'll see how it goes. I think UNG is just in this spot where it's just trying to get its mojo back to keep moving higher. I think long term, I think we go higher. I don't care about all the new surgeries and everything else. I still think healthcare is a good sector long term, and it'll be one that people will move into. All right, we're going to wrap up here. Last trade request was snow from Sam. If we're looking at the monthlies, you're got this area of resistance here. You're moving up. Oh, I'm sorry, this is the weekly. But as on the weeklies, we've moving higher, tipping over on stochastic momentum, potentially MACD, but you've got a nice uptrend here. Does this uptrend hold? We'll see. We had resistance here. And again, I love triangles. Triangles everywhere. Triangles in soccer, triangles in basketball, triangles when trading. The triangle's the greatest patterns, in my opinion. So you've got this nice resistance level here. We did break it. We came back down, broke below it, tried to break it, couldn't, couldn't. So this thing, I think, is a decent resistance level, but you've got the thing, it's not moving higher. The problem is, are you going to break this uptrend line in here? This is the 221 EMA. MACD's falling. Squeeze. It's in a squeeze and falling, and stochastic momentum's falling. So I'd be a little concerned on snow at this point in time. If we break this 184 level to the upside, I think you've got a good potential here. If we break this downtrend, which if I was a betting person, you've got negative on every indicator. Stochastic momentum, the squeeze, and it's in a squeeze. MACD is falling, RSI is falling, and you're in a PSAR downtrend. I don't know what else to tell you on snow right now. I probably wouldn't be doing a whole lot of anything. All right, so there's some stocks to look at. I don't know that we had anything on our watch list that was exciting to run into today. Bank of America making a nice move on the day. I think this is a good looking chart. I think banks look decent in here. I think you have some uptrend possibilities on banks. As you're moving forward, you got some potentially resistance areas in here on banks, especially Bank of America or something like that along in here. So as that gets narrower, let's take a look. Anything else down here? EOG, similar. Got this little run up into some resistance. MS, Roblox here. And this is a pretty solid looking resistance line right here. I'm not drawing anything perfect for you right now. And then, okay, there's where we are on Roblox. If this thing breaks higher, I think you're in good shape. You've got also a longer term weekly uptrend. So you're running into support. Does it want to fill this gap? You've already filled portions of it. I think you can fill this gap. So I think Roblox in here looks really good if you can get above 42 on Roblox. So I think that's one that I would be considering looking at. And you've got a MACD crossover today. You're in a squeeze with stochastic momentum rising. I would be trading Roblox if I was trading stock right now. And then XLE also came up on my scan today. We've already talked about it. However, you've got the MACD also breaking the zero line with the MACD. So, and then you can see the histogram also marching higher. So good looking stuff on energy. T-Mobile, another one in here. You've filled this gap in here. For the most part, you filled this gap. MACD is crossing the zero line. Squeeze is firing. This thing is moving on all cylinders right now on T-Mobile. So there's a handful of stocks, a handful of things for you guys to take a look at. If you got any other questions, we'll deal with them in the Discord channel. Have a great trading day. Again, I liked CL. I liked RTY. I liked gold for a strangle. I liked MA for a broken wing butterfly. You know what? There's a couple more I didn't even get into. We're way over time, but let me jump in and share a few more opportunities that I really like that I did not get to. Let's look at CRM quickly. CRM, I should have been on the charts. CRM is absolutely in the tightest triangle you can imagine. It's a symmetrical triangle on CRM. I think this is a really good potential breakout on CRM. I take a look at that. I hate going too long with you guys here, but I think most of you guys are hanging in with me, so I appreciate it. Just a quick look at CRM. Look at this symmetrical triangle here. If it breaks to the upside, I think CRM has a good opportunity to run. Stochastic momentum is rising. MACD is reversing. The squeeze is reversing here on the momentum side, and you're up here about 214 on the PSR reversal. If we break that, it's going to reverse that higher. I like it here. I think CRM is a really good play. I'd be looking to do something in CRM as well. Sorry, I jumped into that. What would you do? You can do a lot of things. You don't have earnings till August. I think if I'm playing something, maybe I'm looking at some sort of a put spread in here. Maybe the 200, 195 put spreads. You're getting $63 for 427. That's a pretty good rate of return for just 25 days. And I'm only doing this, though, if I see this thing move to the upside. 6B. Again, if you're hanging in there with me, I really appreciate it. I'm looking at a 112 on 6B, and I'd probably be looking at the 67 days. 6B is the British pound futures. So if we're looking at, we're not going to go back and look at the chart on it. You can do that on your own. But 6B is the British pound futures. It's in an uptrend. The dollar's, been, doing its thing. It's up a little bit today, but the dollar's been weakened a bit. But the pound beat up sideways, but I think a 112 would be perfect here. And I would be looking, when I put this on the other day, this is what I saw. Oh, and it's still holding true this morning. Okay. And I don't know if the futures market's about to close, but this would be my 112 on the British pound futures. So this is what I'm looking at. Somewhere in this area, obviously size to your account. I'm $81 on this account in the tail on only $2,000. Okay, so I'm at 4%. I'd like to get a little bit more than that. So maybe we gotta, come up just a fraction down here to get something along these lines. So maybe, $113, $113 in the tail on 2140 in margin, closer to 5%. So something along this line. I think I like this trade on the British pound in here. And then lastly, a leap trade for you. C Limited, for those of you that are familiar with it, I think this is a leap put extraordinaire. If I want to go down and take a look at something on C Limited, probably do sell something in this range. I'm taking in $255 on this leap and spending $350 in buying power. That is an amazing return on your leap right now. So if you want to sell a leap on SE, I think you can go all the way down to 35. If you look at the chart on SE, it's doing pretty well. In here, it's coming off some of its lows. I think it's got, I think it's basing out here around 55, 56. So I think the 35 would be a fantastic place to put these leaps on SE. All right. You guys have a great rest of your day. My voice isn't going to hold up any longer. Enjoy a fantastic 4th of July, everybody, and we'll see you in the Discord channel. All right. Thanks, everybody.